This week, HECM financial fact-finding. Should reverse mortgage professionals be conducting financial fact-finding, and what are the best practices and pitfalls to avoid? Here's one financial advisor's perspective in our exclusive interview after this short message.
Building relationships is the way Mutual of Omaha has grown into one of the leading financial services companies in the world. Our reverse mortgage wholesale division is proud to carry on this 100-plus year tradition. To your borrowers, a reverse mortgage is more than a transaction. It's a promise of a better, more stress-free life. Our goal is to provide you, our valued client, with the best service and support possible so you can focus on helping your borrowers achieve the retirement of their dreams.
Welcome back to the Industry Leader Update. This episode, we're going to dive into the topic of financial fact-finding, which we have addressed a couple times on this show. And we want to explore if the reverse mortgage professional should be conducting some level of financial fact-finding, and are there concerns or risks in a mortgage professional doing that? So to answer these questions, we have brought back a financial advisor, wealth advisor, Ryan Ponsford, with Equity Wealth Strategies, also the founder of Equity Wealth Academy, which helps reverse mortgage professionals better communicate with financial professionals. So Ryan, thank you so much for taking the time to come back today.
Hey, thank you, Shannon. Always a treat, always a pleasure to be with you.
Ryan, top of mind is the question, is there a place for mortgage professionals, whether you're traditional or reverse mortgage professional, an originator, to be even conducting financial fact-finding?
Is there a place? Well, that's a great question. For me, it's more of a question is how could there not be a place for doing intelligent and solid, good fact-finding? My personal belief is there's two ways to approach a problem or providing a solution. One is you're trying to sell something. The other is you're actually trying to solve a problem. If you're trying to sell something, your mission is ask the least number of questions you can to get just enough information to be able to spin it well enough to get them to say yes, right? You do that, you can sell a thing. And people have made lots of money doing that and selling reverse mortgages. The alternative to that is if you actually want to provide a legitimate solution, if you want to serve families, if you want to create clients for life and business partners for life, the mission is not sell a thing. The mission is solve a problem, identify challenge, identify problem, be the bridge for that gap. And I can't fathom a way that you can do that without asking good, intelligent questions to understand the person sitting across the desk or the kitchen table or the Zoom call from you in order to understand where they are, where they come from, what options they have, what concerns and risks they have in order to be able to provide a good solution. And I don't see how you could do that without having a thorough methodology for fact-finding and understanding them.
Are there any regulations that restrict or even prohibit asking these financial questions to do a thorough fact-finding for a mortgage professional?
Yeah, good question. I think, there could be some perception of a fine line of it really comes down to, I don't think it's about the questions you ask. It could be about the advice you give or what you do with the responses to those questions. So I think the line of the risk you run is, are you giving financial advice or investment advice or something that you're unlicensed to do? And, is there a risk there? Yeah, of course. There's a risk, when you walk out your front door every morning. But I think you just have to be careful. If I'm talking to a client and I'm a loan officer and they're telling me they have assets in a retirement account and a non-retirement account, if I start getting into, maybe they should buy more stocks or bonds, or maybe they need to change how they're taking withdrawals, then at some point that might become a risk around I'm now giving financial or investment advice. So don't do that. I don't think many people are doing that. I would actually say there's maybe a bigger risk in not asking good questions. Because if you don't thoroughly ask questions, understand them, all of a sudden give them advice that is unsuitable for them, then to me, that's a bigger risk. You run the chance of, hey, you sold somebody a reverse mortgage, 2 years later they moved out, or you didn't know they had a massive spending problem. They took all the money out of the line of credit, spent it, and now they can't pay taxes and insurance. and you didn't know any of that, and now you have risk and you face some type of liability from a beneficiary or whomever. To me, that's a bigger risk by not asking the questions and not knowing than it is asking great questions.
Excellent point. Why do you think that some mortgage professionals, even reverse mortgage professionals, are reluctant to conduct financial fact finding, to find out about their sources of income, if those sources of income are going to continue in perpetuity, or if there is a timeline or a horizon when they're ending? Why do you feel that mortgage professionals may be reluctant to do this?
There's probably a few reasons. I think one could be just general confidence, which is usually a lack of competence. I think the industry in general has done a rather poor job of training our loan officers on what questions to ask and what to do with the responses. It's been a sales environment for years. Let's be honest. Like, it has been, let's sell reverse mortgages, and there's so much pressure from companies on selling widgets. What do you have to do to get there? The call center environment's built on that. I could tell you some interesting stories around observing some of those. And it's all around selling, not around solving. So I think training is part of it. So there's a competence and a confidence that absolutely comes into play. And people just don't know where to begin, what questions to ask, or again, more importantly, maybe not even what to do with the responses. And I think there's some intimidation. Like, well, what if they don't tell me? I've heard from a lot of loan officers where we've been out on joint meetings with them. And I'll ask the question, hey, what is this? Well, pre-meeting, well, before we go, hey, what does this client have in assets? What's their income from Social Security? And they say, I don't know. Well, how do you not know? Well, I didn't ask. Well, why wouldn't you ask? How can you provide a solution if you don't know what they have? Well, I don't think they'll want to tell me. Well, why do you think they don't want to tell me or tell you? Well, because it's not relevant. Okay, well, that's in your mind, right? So a lot of times, we teach a lot in this academy that your beliefs are what drive your behaviors. Your beliefs drive your behaviors, and your behaviors drive your results. So if you don't believe that you have any reason to ask them those questions, then you're probably right. You won't. And your behaviors will reflect that. You won't ask the questions, and you'll live in salesman world or saleswoman world for the rest of your life. But if you believe that you're here to add value, and you've done the work or the homework to understand how your solutions do make a difference. If I have $1 million or $200,000 or $0 or all my money in a retirement account, lots of Social Security, no Social Security, I'm a spouse, I'm a single person, whatever that, if you don't believe your solution changes based on the responses to those questions, then don't fact find. Go sell reverse mortgages and carry on. But if you think and understand that this solution changes and how you design a plan for somebody using reverse mortgage or any other thing for that matter, then you be obligated to fact find. You'd be obligated to learn how all these different pieces fit into the puzzle so that you can, again, provide better solutions and create better outcomes for these millions of families that are there to help.
Reflecting on what you said, Ryan, it seems that financial fact-finding would help the reverse mortgage professional better structure the loan in the benefit of the homeowner. Is that correct?
I don't see how it couldn't. I mean, there's two things. One of it is, yes, providing better solutions, and that's the ultimate goal. The other thing is, when you're providing a solution, reverse mortgage has some complexity to it. I don't think anybody can deny that. So if you know nothing, you now have the obligation to go in and present every possible outcome that can impact this family top to bottom, because you have no idea what's going to stick or what they're going to be interested in. If you could do some good fact finding, you now have the opportunity to position what you're saying around an actual solution that's going to help them, right? If you don't know the details of what it is they're trying to accomplish, you don't even know how to position what you're doing. And so it streamlines your ability to create better solutions and present it in such a way that they'll comprehend it, and comprehend it in such a way that it applies to their personal situation. Like, it doesn't matter if your solution worked for somebody next door that's in a totally different world. It's irrelevant. So you have to be able to position it in such a way that it's meaningful to the family that you're talking to.
So is there just broad brushstrokes here, is there a basic checklist of some of the questions a reverse mortgage professional could ask a homeowner to at least get a better grasp of their present situation and maybe some of the pitfalls that could lie ahead? Join us next week for part 2 of our exclusive interview with Ryan Ponsford as he continues to discuss how HECM professionals can more effectively fact find with homeowners and a formula that works in broaching that subject with homeowners in such a way where you don't have to be intimidated and at the same time you build competency in the eyes of the older homeowner. So don't miss out on that. Be sure to return next week. Also, please share this video if you would on your LinkedIn profile. We have a YouTube channel where you're going to want to subscribe and hit the notification bell. That way you never miss an upcoming episode. And each and every week we bring you the most recent reverse mortgage related news on our weekly podcast, HECM World Weekly. You can listen and subscribe on Apple Music, Spotify, Podbean, and we do have a video companion of that podcast as well. Thank you so much for joining us, and be sure to return next week for more reverse mortgage news, commentary, and analysis you'll only find here at HECM World. Have a great week.